If you want to learn how professional traders use macro and fundamental data to trade the markets, you're in the right place. What's up YouTube, my name's Dan and welcome to the first episode on the TCBX YouTube channel. This series is called Recap the Week. We'll be going through all the data from last week, the trades I took, what made me take them trades, and what I think is going to happen next week. I trade Forex, commodities, futures and crypto using a macro driven style. So if you're into understanding why markets move, you're in the right place. Please make sure you like and subscribe, and let's get into the week. Right, before I get into last week, I just want to quickly say something. For this approach, the news is very, very important. You need to be reading it every day like your grandma reads a newspaper. It's a non-negotiable. If you reinforce this early, it will help massively because it'll just become a habit. It gives you the peace of mind for your macro bias and whatever's going on geopolitically. It makes sense. It makes sense to just stay informed. It's the best advice I can give you if you're wanting to use this strategy. The two main things I use are investing.com and TradingView. So what I'll do is I'll get a watch list full of everything. And then on TradingView, you've obviously got your watch list here as well. So that's everything that I would ever consider looking at. On investing.com, that is everything there. So then what I like to do is I'll just start from the top, but we'll do crude oil because that's the first trade I took this week. So we'll click crude oil, then you just go to news, and you've got everything. Look, there's some news about Venezuela, and then there's S&P. Oil to average 65 in 2026 as supply growth ahead of demand. So then what I would do is I'd find, it's all right, I'll see that. Click on that, then I'll have a look at this. So it says oil prices are likely to fall further in 2026 before stabilizing. As supply growth, again to outpace demand through the downturn, may be shallower than markets expect. So what I would do is on a Sunday night, so after you watch this video, go have a look. Just read through the news, get your watch list set on investing.com. This is personally what I would use. Obviously, if you've got another outlet for your news and stuff, by all means, do what fits you best. So then what I would do after that is I'll go on to the economic calendar. And then we'll just do it again for crude oil. That'll be all the I'll just use that for the examples this video. So I'll scroll down, and then as you can see here, we've got crude oil inventories 15:30. That's UK time. So then what I'll do is I'll go back onto TradingView, and this is something I like to do. So they do all come up here, but what I like to do is this. So you see you've got inflation. So that's inflation news there that's coming out at 1:30. So then what I'll do is I'll get a horizontal ray, and and then I know now when I'm looking at this, that is when the news is going to hit. Yes, you can just look there, but for me, I like the line up there, and then I'll even go. Oh. Inflation, we'll maybe change the colour because that colour's not looking good. There. So now I know that when that comes, that's inflation news. Then what have we got here? We've got PPI, home sales. So what they don't have here is the inventories, which is quite... see, that's what I mean. You could use these to a degree. But see, look here. So we've got 14th of January, crude oil inventories 15:30. That will move oil. That is a very important one for oil. So I don't see why they haven't put it on here. So that's Wednesday. On Wednesday the 14th. So we get another one of them. Do this for every bit of news that is important to what you want to trade. And trust me, it's just about having the visual on the chart for you. It makes it very easy to see when stuff's coming up because obviously if you don't trade the news, or if you're looking to trade the news, some people do either, then I know now when I come back here onto the hourly, look, so I know that's when inflation news drops, that's when crude inventories drop. All these will affect the price of oil. Right, so now that's out of the way, I will show you this. Also, keep your chart clean. I know it sounds small, but it makes a difference. You don't want old drawings, old positions, random lines giving you a bias that you might not have. Just because you were selling something last week doesn't mean that you will necessarily be selling it this week. That has helped me as a trader improve as well, because I used to leave all the so say I took a trade, for example, and it was a sell here, and I won that trade. Just complete example here. So say we sold that and won that. Psychologically, I'm thinking, well, I sold last time. You know what I mean? Like, do I really want to be selling again? But it's not about what you did in the past. It's what opportunities are being presented to you in the future, and that is a very important. For me, that's very important. So for the chart, you want your hotbar with everything that you use. Your news events lined up. Keep your chart clean. And right now we'll move on to recapping the week. So this is my fresh trading journal for 2026. It's public and it'll be linked in the description. I post it on my X and my Reddit, so everything I do is transparent. You can see here I took 2 trades on Monday, both on oil. One was a win, one was a loss. And honestly, that was my first mistake of the year. I only should take 1 trade per day. Limiting yourself forces you to be more consistent. It forces you to pick the better opportunity instead of over trading. And if you do this consistently, you'll level up faster. So here on my journal, I've got the screenshots of the trades I took. So I haven't got the first one, but it was a loss. I'll amend that for anyone who's looking. But this is the trade that I won. So we've got here. I was looking to short oil. I was shorting oil because of the geopolitical tensions going on in Venezuela. I thought it was probably the smarter thing to do. I knew oil would rise in the short term because I think the first trade I took was down here. So price broke lower. And then I just assumed with all the price broke lower, and then I just assumed with all the like geopolitical stuff, obviously Trump captured Venezuela, which is quite an important thing, especially when Venezuela has the biggest oil reserves in the world, and he'd openly said that they'd be taking the oil. So I bought in. I knew it would rise. I was very impatient. It wasn't a good trade. However, this trade, it hit my TP. I waited. It looked like it came into a good range. And this was the result. Smashed. Don't get me wrong, still went up, but we put our stop above a previous high just to make sure that if it was going to change direction, it was going to break the last high that it had made. So that went straight down, smashed TP. That was a 3-to-1 risk. However, I only put half risk on that because I'd already took a trade, and like I said, my rules is to only take 1 trade per day. I hadn't. You can see these few bits up here. These are all ongoing positions. These are like position trades. Everything I'm going to show you today is day trading. So we took that. We got a 3-to-1, but we only made 1.5% because we didn't scale our risk properly for that. So why did we take the oil trades? Major geopolitical shift in the oil market. Maduro was captured. Venezuela has the most oil in the world. So the bias was bearish in the short term. I figured the market will first spike on the headline noise and then roll over once people started thinking about where supply actually goes from here. So I was right, but I got in too early. And that was my first mistake. Right, now on to silver. So This was my second mistake of the week. It was actually a winning trade, but my head wasn't in the right place. I slept badly. Um, I was tired, and instead of letting the trade do its thing, I panicked and closed early. It went on to be a really clean move. I would have seen another 3% on my account if I'd have just followed the plan. So that is the silver. However, I jumped out more or less at break even, only lost 0.05%, and it went on to smash TP. But it's just a part of trading. If your mindset's off, it doesn't matter how good the setup is, you'll find a way to mess it up. I'm not going to sit here and pretend I'm perfect. I'm on my journey as well. And it's one of the reasons I do these videos, or I'm starting to do these videos, just to keep myself accountable and just show everyone watching that I will make mistakes as well. I'm not perfect. Nobody is. Even the best traders in the world have shit days, and it's just the way it is. You've just got to just dust yourself off and carry on, you know what I mean? So then the next two trades I took were on Wednesday and Thursday. We took a gold trade. See, I had quite high hopes for this gold trade. It had come into a zone that I liked here, which was like a high volume zone. And we took the trade. It came up 1 hour. So what happened? So I like to take partials all the way up. This trade was a 4-1, so I like to take partials all the way up. So we got to 1R, took partials, and then it just reversed straight down and hit. As you can see, that's a high volume area right there. Came straight down and just pushed through it. And there was not really too much I could have done because I was bullish gold still. Obviously, there is a lot of geopolitical tensions going. The way I trade is I like to have a bias that I can like physically sort of know, you know what I mean? So I like to have a bias that I can sort of understand, and obviously geopolitical is very good for gold. Whenever there's war, gold is a safe haven for traders. So that was terrible. Not terrible. I followed my plan, but it just didn't go the way I wanted it to, which is just the name of the game sometimes. Now the silver trade though was my best trade of the week. I've been watching it most of the day, waiting for price to come into a really important level, and then using my high volume strategy, I took the trade after it bounced, retraced, took the trade here, and see this. Right, so I took the trade here, and then it pushed off. Once I'd tagged one, I think when it got to about here, I pulled my stop up to London low, which was this candle here, just in case I was not going to lose. So I took profits here. Then it came back down, retraced, and then it's pushed higher, obviously, right up to max TP. It was a clean 1 to 2, and it was easily the cleanest trade I took all week. So I was thinking, this is going to give me some momentum here, and I'm probably going to finish the week on a high. It was another oil trade, a 1 to 3 setup. Price actually tagged 2R before fully retracing back to my stop. The bad thing about this trade is I wasn't at the charts to manage it. If I was there to manage it, I would have took profit, and then obviously if it gone there, I'd have took profit as well. But came in straight down to 2R and then just fully retraced up. Trading isn't your entire life. Sometimes you're not at the screen, and that's just part of it. I know it was a good setup, but you don't always smash full TP like people make it look like you do online. This is just my real week of trading. There's no sugarcoating. I admit where I'm going wrong. I'm still learning, trying to just get better, and you will always lose trades. Nobody has a perfect record, no matter how much they tell you they do. Even with all them losses there, I still ended up positive 2.93% for the week. And that's a testament to the risk management. You don't need to win every trade to be profitable. With a solid strategy, using proper risk reward, you can be profitable winning as little as 40% of your trades. That's why I focus so much on rules and risk. Not trying to win every trade, just make sure I look after the capital I have. So, what we'll do is we'll look at the news and we'll see what could happen next week. So, we'll start planning what we think may or may not happen. Right, so we'll start with crude oil. So as you can see, oil prices likely to fall further in 2026 before stabilizing as supply to growth again outpace demand. China purchases for its strategic petroleum reserve may absorb some excess supply, but not enough to prevent a build-up in stocks. Downside risk are seen at highest in early 2026, with market conditions improving in the second half. Bernstein forecasts global oil demand growth of about 0.8 million barrels per day next year, trailing non-OPEC supply growth of 1.2 million BPD. A smooth political transition in Venezuela could eventually lift production by as much as 3 million BPD over the next decade, which would be bearish for prices. However, disorderly transaction could disrupt current exports of about 1 million BPD, tightening the markets. So I am currently bearish oil. So it going up like this, it's good. It's good for us, good for me, because I see my prediction for oil this year is that's what I think will happen with oil. I think it's probably going to open higher on Monday due to all the buying pressure from last week. Anything more geopolitically happens, like Venezuela, if the Americans keep going like they're going in Venezuela, the price of oil will touch 50 this year. Guaranteed. $50 a barrel. Not guaranteed. I shouldn't say that. My prediction for oil is that it will touch $50 a barrel this year. Right now, the next thing I am watching like a hawk next week is silver. So we've got jobs data. Barclays are seeing copper climb 78% in a bull cycle. Goldman Sachs warns of silver. Alright, so we'll look at this. Goldman Sachs expects extreme price swings in silver to persist following the metal's heroic 138% gain in 2025, citing thin London inventories as a key factor amplifying market moves. This aligns with iShares Silver Trust data showing a remarkable 169.7 one-year return and 120.49 gain over the past 6 months. The investment bank attributes the recent price action to private investor inflows driven by Federal Reserve easing policies and diversification trends, but notes that a liquidity squeeze in London, where the silver benchmark prices are set, has significantly magnified these movements. China's introduction of export controls on January 1st, requiring permission for outbound silver shipments, could further fragment the market and amplify price volatility, even if US policy regarding the silver tariffs is clarified, according to the bank's analysis. With SLV currently trading at 70.79, near its 52-week high of 73.84, investors seeking deeper insights into silver's potential amid these market dynamics can access additional pro tips and comprehensive. Right, so we're bullish. I am currently bullish gold, bullish silver, bearish oil. Crypto is still in a weird phase where I can see it still going down. If I'm being perfectly honest, I think my current prediction is Bitcoin will touch 50k before it keeps going back up. The stock market, however, is also in a weird spot. But for the stock market, we use something slightly different. We like using the COT for the futures. See, the leverage money is still short in the Nasdaq as of the 6th of the first. Asset managers still incredibly bullish. Leverage money, it was down here, and it's been creeping up, which is a bad sign, really, because you realistically you want to be going the opposite way to the leverage money, because most of the time they're wrong. So that's another website you can use, tradingster.com, COP futures, and that just gives you loads of information. This is the most important thing I find. I tend to follow the asset managers and go against the leverage money. All right, traders, that's it for this week's recap. I'm going to be posting these every Sunday throughout 2026. I am pretty green to this, so I'm going to get better as I go along. I know I've stumbled through this one. I just need to improve my delivery and just not feel so nervous around the camera, really. The whole point of this, though, is just to keep myself accountable and keep improving the execution as the year goes on. I've only been trading a little over 2 years now, but I feel like I'm starting to find my footing. So thank you for watching, especially if you've made it this far into the end. If you enjoyed the video, make sure you like and subscribe. And if you want real-time updates, I have a free Telegram community. I'll put it in the link below. It's 100% free. All my analysis goes in there. All the positions I take go in there. And I just post the news that I find interesting. I'll post in there as well, just because I can go back to it. Members can go back to it. But like I said, free, completely free. I'll leave the link in the bio. I'll leave the link in my description. Sorry. I'll leave the link in my description, and I will see you next week. Peace.